Hello and welcome back to our channel. We have another super quick lesson on wealth management bite size for you today. My name is Sunaina Bisht and I'm a financial advisor with a leading financial institute of the country. And today we are talking about life insurance and Married Women Property Act. I'm sure a lot of you listening in will not be aware of something called a MWPA, which is Married Women Property Act. Now, this came into being a little while ago and is something that every person who's married and thinking about taking a life insurance should be aware of, and therefore we thought it becomes a very important topic that we should be discussing and bringing it out today to all of you. Married Women Property Act basically helps in giving the right to the claim amount to your family. Uh, a lot of us, when we buy our life insurance, is also because we would want to protect our families from the liabilities that come in the manner of debt. But in case you are the sole bread earner for the family and you have a high debt, the collectors will most likely be the first one to claim your life insurance. That means that your family does not really get any benefit out of it at all and might still be left with a high amount of financial liabilities and debts and hard times. And this is why it is important for every married man to look and make that decision at the time of buying the life insurance. Now, when you buy a life insurance, you would need to sign in a form which is called the MWP form, which would make sure that your insurance is connected and covered by this act. It can only be done at the time of buying an insurance and not any point later. So in case you already have an insurance and you think that this makes sense in your life right now, go ahead. You can still buy another life insurance, and if you've seen any of my previous videos, you would know that I usually advocate not buying more than two life insurance. So if you already have two life insurance, probably this is not something that you should be looking at. Instead, what you can do is create your other financial, or rather your wealth corpus, in such a way that that benefits your family and your wives directly. But in case you haven't bought a life insurance as yet, or you haven't bought a second life insurance as yet, make sure that you look at this particular option while buying it. It will protect your family's income and it will not be in the hand of creditors or bankers, who are usually the ones who have the first claim in case of life insurance. Now, the benefits of the feature is it will be for your immediate family. That means your wife and your children, which could be natural or adopted, and it only goes to them and does not go anywhere else besides them. The policy cannot be cancelled without the permission of the beneficiary. So if in case you've bought this policy and at a later point of time you feel that you don't really need it, or you would want to go for a different policy, or for whatever reason you decide that you would want to cancel this policy, your beneficiary, in this case your dependents, would need to be aware of that fact, and they would need to provide the approval in order to cancel the policy, because the benefit of the policy is not for you and not for any other person but for them, and therefore it becomes very important for them to know. And there can be no loans which can be taken against this insurance policy, again because of the main factor that the benefit of the policy or the money from the policy will go to your dependents. The reason this policy came into being was because the married women, and mainly in India and most of other developing countries, they do not really have a property of their own, and most of the time they're not the earning members in the family as well. They're more geared towards uh, the household work, more geared towards taking care of the domestics, and in case of the demise of their husband, they then become a burden or are considered a burden for their families or their in-laws, and then do not have any way of securing their own financial independence. Doesn't matter how large or small the requirement for that would be. It's not just the other creditors or bankers that we need to be looking at, but it is also other nominees that would be there in your life insurance that we need to consider in case of such situations. Therefore, in order to make sure that the impact or the lasting impact of not being financially dependent is not felt by your loved ones, consider taking a policy with this particular act. But it's important again for you to know what would be the pluses and the minus of it. And the biggest minus is that there is no loan that can be taken against it. So again, keep it into consideration whenever you go ahead and buy a term insurance. Alright, so that was the long and short of Married Women Property Act. I hope you've learned something today and it will be of benefit to you. We do a lot of other videos on mutual fund, insurance, income tax, and other wealth related topics. So go ahead and explore them a little bit more. Be sure to subscribe to us. We keep coming up with new videos, and share them with everyone that you care for. Thank you once again.